What up? It's Nate with Grindhouse Capital. I'm going to read you some news. I'm not a financial advisor. From you today, Lagarde on digital euro. Consumers want privacy protected, but they don't want anonymous CBDC. Head of EBC has stated that regarding the digital euro, consumers want their privacy protected, but they do not want it to be anonymous. That sounds just like something everybody would want. The chief of the Central European Bank, Christine Lagarde, has stated that EU citizens want privacy protection when they use the digital euro. Lagarde mentioned that she is expressing the opinion of at least 80 central banks around the world which believe it is their duty to offer consumers digital currencies that would operate to the benefit of the consumers. She described DCBC as currencies that could be used like banknotes, but they will not offer the degree of anonymity that banknotes have. However, consumers do not want this CBDC to be anonymous. This is the result of multiple polls. The opinion voiced above is the majority view, according to Lagarde. Commenting on that, she said that consumers understand the risks of anonymity, hence they're opting only for privacy protection. This is what the new ECB report on digital euro is about. As reported by You Today earlier, the Central Bank of the EU intends to study all the risks of using a CBDC, its possible design and use. Our work on a possible digital euro continues. I told Reuters that the feature citizens say they would value most is privacy, but they don't want such a digital currency to be anonymous. Read more about what we heard in our public consultation. Earlier, Christine Lagarde stated that the creation and launch of CBDC for ECB may take at least 4 years. China is already testing its digital yuan, DCEP, and other European countries are considering launching their state digital currencies in the near future as well. Robinhood suffers digital outage as Dogecoin surges. Regulators seek ban. From Crypto Briefing. Robinhood crashed last night while Dogecoin rallied. Your mean customers. Another crash and a possible Massachusetts ban spell more bad news for Robinhood. The Robinhood team announced the issue on Twitter last night. We're currently experiencing issues with crypto trading, a brief note read, then followed up to say that crypto trading had been partially restored. We're in the tweet, we're currently experiencing issues with crypto trading. We're working to resolve this as soon as possible. For the latest updates, check status.robinhood.com. The posts were met with a sea of complaints from Robinhood customers. Many accused the app of acting in bad faith. You guys experience issues every time the peasants start to make money, huh? A Twitter user called Trent Westcamp wrote. Sure as hell don't have any issues taking it from everyone. Issues, aka because Doge is in rally mode, we don't want people to trade, another user added. Dogecoin surged last night following a week-long rally that significantly outperformed the rest of the cryptocurrency market. It's up 376% in the last week, trading at about 36 cents publication. Robinhood supports Dogecoin and targets its services in the retail investor market. Its tagline is democratizing finance for all. Dogecoin has been a popular cryptocurrency of choice among the retail market this year, thanks in no small part to the drama that began with GameStop in January. Led by a group of traders on the Wall Street Bets subreddit, retail investors memorably pumped GME stocks 1,900% as part of a short squeeze against several hedge funds. They turned their attention to other assets, including Dogecoin and silver. The events wreaked havoc across the markets, with some faring worse than others. Robinhood was heavily criticized amid the chaos after it halted the trading of several assets, including Dogecoin. Following the incident, Robinhood raised $2.4 billion to cover clearinghouse collateral. Robinhood claimed that a collateral crunch was why it had to suspend trading at that time. Trading app, the response to last night's outage isn't the only time Robinhood has came under fire this week. On Tuesday, it was revealed that the Massachusetts Security Division had issued a complaint to revoke the company's license. In a statement, the head of the division, William Galvin, said that Robinhood had failed to care for its customers responsibly. Robinhood had engaged in aggressively inducing and enticing trading, including customers with little or no investment experience. If passed, the rule would prevent Robinhood from operating in Massachusetts, potentially blocking out millions of customers. Robinhood responded by filing a lawsuit to block the fiduciary rule that would make brokers liable for their customers' interests. In a blog post, Robinhood said that the rule was an attack on its core principles. It read, "The complaint reflects the old way of thinking, that new, younger, more diverse investors don't have a place in the markets. By trying to block Robinhood, the division is attempting to bring its residents back in time and reinstate the financial barriers that Robinhood was founded to break down." Yeah. From Cointelegraph. Did Elon Musk's jet fuel set GameStop and Bitcoin ablaze? Depending on where you stand on the GameStop saga, which saw organized retail traders extract $6 billion from Wall Street overnight, you may think someone should either take the matches away from Elon Musk or give him more. The CEO and techno king of Tesla was accused of pouring jet fuel on the GameStop short squeeze at a critical moment by hedge fund manager David Einhorn, founder of Greenlight Capital, in a letter to investors published on Thursday. Einhorn said Musk and venture capitalist Chamath Palihapitiya were real instigators behind the short squeeze, claiming both had supplied the real jet fuel for the pump with their tweets and TV appearances. We note that the real jet fuel on the GME squeeze came from Chamath Palihapitiya and Elon Musk, whose appearances on TV and Twitter, respectively, at a critical moment further destabilized the situation, wrote Einhorn, according to Markets Insider. Amid the orchestrated short squeeze on GameStop by Redditors on Wall Street Bets, Musk tweeted that some interpreted his support for the endeavor. On January 26th, shortly after GME stock was pumped 91% in a single day, Musk tweeted the phrase "Game Stonk," accompanied by a link to the Wall Street Bet subreddit. Over the course of the next 24 hours, GME's stock soared 134%, climbing from a unit price of $147 to $347. The following 24 hours brought even more fireworks, and by January 28th, the value of GameStop shares had hit an all-time high of $483, an 18,693% increase on the stock's value just 9 months earlier. Palihapitiya appeared to voice his support for the short squeeze on January 27th when he told interviewers on CNBC that the GameStop saga was an example of the man on the street pushing back against the man on Wall Street. Einhorn said that quasi-anarchy now reigns based on what he sees as toothless regulation of the stock market. Einhorn compared the situation where the laws don't apply to Elon Musk to the defunding of the police force. Many who would never support defunding the police have supported, and for all intents and purposes, have succeeded in almost completely defanging, if not defunding, the regulators, said Einhorn. Previously, Musk was suggested to have unduly influenced the cryptocurrency market with his vocal support of Bitcoin and Dogecoin via Twitter. Legal professionals suggested in February that Musk's tweets may have acted as a catalyst for the coin's gains at the time, and warned that such tweets could attract attention from the United States Securities and Exchange Commission. Musk laughed off the suggestion at the time, claiming he would welcome any SEC investigation into his tweets and that he simply liked dogs and memes. There you go. From Ethereum World News, Binance 15th coin burn destroys 0.595 billion worth of BNB. So a little over $500 million. Earlier today, the crypto exchange of Binance carried out its 15th quarterly BNB coin burn. The event removed from circulation 1,099,888 BNB, worth roughly 595,314,000 at the time, thus becoming the most valuable Binance coin burn to date. With the recent coin burn, the total supply of Binance coin is reduced from 170,532,000 to 169,432,000. The quarterly coin burns will continue until only 100 million Binance coin are left in circulation. CEO of Binance CZ marked the event by sharing the enormity of the coin burn through the following tweet. Imagine burning $500 million. Wait, don't imagine, it's real. Binance Coin BNB holds $500 amidst news of Turkey banning crypto payments. Earlier today, Binance Coin was preparing for what looked like a retest of the $572 price area from a local low of 506 as a result of the news of the massive coin burn of 595 million worth of BNB. However, as soon as BNB hit 550, the cryptoverse was made aware of a plan by the Turkish central bank to ban cryptocurrencies as a form of payment effective April 30th. Due to the news of a pending crypto payments ban in Turkey, Binance Coin once again retested the local low of 506 soon after. The latter price area is now an area to watch as it will determine whether BNB falls below the psychological price of 500. Binance Smart Chain on-chain metrics remain strong. From a fundamentals point of view, today's dip and any additional losses today by BNB might be temporary as on-chain metrics from the Binance Smart Chain point towards a growing ecosystem surrounding the coin. The Binance Smart Chain has a high level of user activity, with the network now hosting a total of 64,957,737 unique addresses. The number of daily transactions on Binance Smart Chain has continued to exceed 3 million since the beginning of the month, with current count hitting 4.737 million. Such activity on the Binance Smart Chain translates to a bullish future for Binance Coin, in addition to the quarterly BNB coin burns. That's all on that. I did not get BNB when I should. From Crypto Slate, 211-year-old investment firm buys 4.75 million of Ethereum. The centuries-old Rothschild Investment Corp got exposed to the asset via Grayscale. Chicago-based financier Rothschild Investment Corporation purchased over 265,000 shares of the Grayscale Ethereum Trust, marking its first ever investment into ETH, the asset powering the world's most used blockchain. Rothschild shares in the ETH Trust were worth over 4.75 million on March 31st, as per the filing. The firm is a part of the legendary Rothschild family, a secretive group with interest in global finance, real estate, mining, jewelry, winemaking, and others. The family possessed the largest private fortune in the world in the 19th century and even in the modern world. As such, the ETH-E is one of the many crypto-backed trust products offered by Grayscale. These are fully regulated, institutional-focused financial instruments that hold a small amount of spot crypto as part of each share offered to investors. The product is currently one of the only ways, unlike unregulated crypto exchanges that could go bust at any time, for institutional investors and family offices in the U.S. to gain exposure to the burgeoning crypto market. Such an arrangement attracts the likes of the Rothschilds. In addition to the E investment, Rothschild upped its position in the Grayscale Bitcoin Trust by nearly 8,000 shares to 38,000 shares, an increase over the 30,000 shares it held at the end of 2020. These are now worth 1.92 million. The firm became the first brand name institutional fund to seek ETH exposure through Grayscale's trust product. Most institutional crypto activity is majorly limited to Bitcoin, but Ethereum's strong fundamentals, upcoming technological updates, and an overall wider use case is starting to make it a better bet for some investors. As per a report by analytics firm CoinShares last month, ETH-related investment products attracted a total of 4.2 billion inflows in Q1 of 2021, the highest ever level on record. Fund flows data highlighted Ethereum as being increasingly popular among investors, with inflows of 113 million last week, comprising almost 50% of total flows, it said in the report. Some are even buying spot ETH instead of spot crypto-backed financial instruments. Chinese firm Meitu, in a Hong Kong listed photo editing app, became the first company earlier this year to do so, buying 22 million worth of the asset in a single day. We'll go ahead and make a note right here for Levi that we're not always going to pronounce every single word correctly, and that's part of the fun of it. I think that's all I got for y'all today. Maybe get some more in, I don't know. But we'll holla. Peace.